and welcome back to Street Signs. A healthy Q2 for Indian pharma major Lupin. Net profits jumped more than 3.5%, 3.5 times rather, from a year ago to around 5 billion rupees. This was helped by both domestic sales and new product launches in North America. Sales in North America were up 40% in the September quarter compared to last year. The highlight, though, was their inhalation drug, making up for a substantial portion of sales in the region. Well, to talk more about the company and outlook, Ramesh Swaminathan is Global CFO and Executive Director at Lupin. Ramesh, good to have you with us. How do you view the performance this quarter, and what can we expect ahead?
As you outlined, we have done particularly well in America, but you could also say it's been secular growth across various markets. In America, we have got the benefit of, in fact, newer products that we brought into the market, especially Spiriva this particular quarter. Last quarter, it was Darunavir and the like. So essentially, we have been building up a portfolio of products for the U.S. markets for long. I've been speaking about it, and it's time that we actually launched it. But growth is not just restricted to America. It's, of course, in Europe as well, where we have, in fact, another respiratory product, Foster, which is doing fairly well, Lufobec, from our perspective. And these have been launched in the UK and several other parts of Europe as well. But India also continues to do pretty well. The year-on-year growth has been 7%. And I would say that other markets also, are shaping up fairly well for us.
Ramesh, the U.S. is your biggest market, almost 40% of your revenues. But when you look at what's happening in the U.S. market, constant regulatory scrutiny and pricing pressures there as well, how much is that affecting your profitability?
Well, it does impact for sure. If you look at the period between 2018 and 2021 until very recently, in fact, our sales were kind of stagnant there, essentially because the U.S. markets had not really contributed to overall performance. A lot of it arose because the fact that whilst we had the pipeline for launching products out there, they were not getting clearance, given the fact that a lot of our factories, 5 of those to be specific, were under scrutiny of kinds. There were warning letters and the like. Because of that, there was, the products were not getting cleared, and to that extent, we didn't have the benefit of the pipeline, so to speak. Things are changing. Over the last 1 year, you would have seen that 3 of the factories have got cleared, essentially our Somerset factory, our Pithampur factory, and we could also say the Goa factory a few months ago. A couple of those are still under review, but it's a question of time before we get out of that as well. Given that, we still have a pretty decent pipeline in terms of respiratory and a host of other complex products to come to the market, not to speak of, in fact, the OSD portfolio that was, which has been there, but some of those have actually lost potency. I would say that we are in for good times.
Okay, let's talk about that pipeline of drugs coming onto the market. What can you tell us specifically that you think could give the company a boost?
There are a number of products that we have lined up. So we already have Spiriva, and Spiriva is in for a run for the next couple of years at least, because of course there is no competition in sight for this. The products that we launched in recent times are also doing very well. Albuterol continues to do very well. We had the benefit of Suprep for a pretty long time. Then a host of products that we would be bringing along in terms of the injectables portfolio and respiratory. Talking about respiratory, we are into nearly every product, which could potentially be thought about. Say Advair. And the same could be said of, in fact, injectables. A host of newer products on that score as well. A lot of our R&D expenditure today is pivoting to more complex products, and that shift is pretty palpable. And from that perspective, I think we are in for pretty optimistic times going forward.
You're spending a lot on R&D, I can see that, and rightly so, because you're a pharmaceutical company. But when I look at your numbers, personnel costs rose in the latest quarter from the previous quarter. Are you grappling with wage inflation?
Not really. Actually, if you look at it as a percentage of sales, it is actually much lower. We, of course, hired close to about 1,300 people, investing ahead of the curve for potentially looking at expansion of territory in India. The number of doctors that we call on, the intensity of calling and the like, that obviously means that there is, of course, speaking about, there is going to be costs associated with that. In recent times, we've actually indulged in a lot of workforce planning exercises, so to speak, at the factory level, at the SG&A level, in terms of R&D and so on. So as going by sheer numbers, it is actually seen a little. It's actually been around the same number, so to speak. And of course, the cost associated with actually increments and the like on an annual basis. So I would say I'm particularly pleased with, in fact, the way our payroll costs have actually evolved over time.
Okay, Lupin also planning to spin off the active pharma ingredients business. That was one of the reports I'm seeing right now. Can you shed some light on that?
It's too early days. Essentially, we do believe that there is interesting opportunity in that space, given the China Plus One strategy, factor that is playing across the globe, and plus, of course, we have tremendous capacities that we have not been utilizing. So we spun off 2 factories out of 5, so to speak, in the API space, essentially Visakhapatnam and Dabhasa. We're going to focus on, in fact, routes to synthesis and fermentation out there. We already have 15 products, and we've got another 35 to go in terms of coming out of those products over the next few years. We would also be focusing on, in fact, the CDMO business, so to speak, in terms of potentially looking at, again, these 2 platforms and taking things forward for a host of other ethical companies as well. So pretty bullish about this business because it's a pretty large one, but the potential is there. And we would like to benefit from those tailwinds associated with that particular foray.
Let's talk about your marketing deals. I think you've signed a co-marketing deal with Zydus for a liver disease drug. How is that coming along?
It's early days, but we're pretty excited about all the opportunities. We'll be looking at in-licensing products from a host of other ethical companies as well. All of this will certainly play in pretty well. If you look at, in fact, our global portfolio or the Indian portfolio of products which are in-licensed from various other companies, it used to be about 16%. It's come down a bit to about 13.5% of our total turnover. In fact, the number of products that we in-license is potentially amongst the highest in the Indian industry. And that obviously speaks a lot about our ability to kind of, gain volumes for these products and the fact that people rely on us for taking this forward.
Ramesh, we'll have to leave there. Thank you so much for your time. Good talking to you. Ramesh Swaminathan of Lupin talking to us there. Well, today's upgrades and downgrades is on the other side of this break. Do stay with us on Street Sides.